Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're gonna go through Twitter. I also shared some stuff on Twitter myself, a lot of ratios. So we'll go over some ratios of what I'm seeing in the markets. But we'll go over what people are sharing on social media. They'll be related to three different topics: wealth building, financial topics, and/or commodities. That's what I'm interested in, and that's what I'm looking at for the majority of the time. All right, so let's dive in here. Let's see what people are sharing, and I'll interject my financial opinions as we go. If you want to follow me at Finance. If you want to join our community, finding-value.com, we do have a discount going on called LEAP. LEAP is the coupon code where I share and do trainings. I share openly and express my views with individual companies, all on that. And you can interact with me directly through Zoom. So let's go into some ratios that I posted. So the energy service sector looks pretty solid, in my opinion. We've got OIH that is outperforming REMX. OIH is the energy service company ETF, and then REMX is a rare earth metal company. What we look for is a bottoming. So in 2022, it bottomed and turned. I am very much, and I still like the energy service sector because of how cheap it is in relationship to a lot of different sectors. Some of that valuation has come up, has been realized against some of the other sectors. Still a long way to go. Still looks good with the green army and small red candlesticks, working its way up in this ratio chart. The decisive bottom here was definitely in 21 and 22 with the inverted shoulder, head, shoulder, and then the breakout of that. OIH versus MOO. MOO is the agriculture ETF. And you can see that we are slowly building a base, and I think this will eventually accelerate to the upside with energy service companies eventually outperforming MOO. Then we've got OIH versus GDX. Still, surprisingly, OIH is very cheap against GDX, and I know everyone does not like the gold and silver mining companies, but they must really hate energy service companies, although they are improving. They continue to make their way in valuation gains against GDX, whether that's GDX falling or OIH going up, or a combination of both. But we're at this long-term resistance line that we're just underneath, and I do think we'll break to the upside. And I think we could see a big move in the energy service companies outperforming GDX so long that interest rates continue higher. If interest rates turn around, this could easily pull back and have a little bit of a bigger pullback if the market conditions change for GDX to start to outperform. And this is OIH, just flat out energy service ETF. This is what it looks like priced in dollars. We did a false breakout of this squeezing of the falling wedge, false breakout. This is like the time to buy it right down here. And then we've been working our way up. We haven't really exploded to the upside yet. I think that will come with time. I've got a lot of really good leverage plays in the oil service company area if you guys are interested. Coming on down, we've got oil and gas ETF, XOP versus other sectors. And I like looking at some of these ratio charts. So here's XOP versus GDX. This is a controversial one because XOP represents a certain inflationary market condition. GDX represents, in my opinion, a little bit different market condition. That represents when the yield curve basically uninverts. We start to see a big slowdown in inflation. We start to see a potential recession crash that's coming. So if that was the case, what you'll see is you'll see a turn where this goes downward. XOP sells off, GDX starts to either hold its ground or start to go up, and you see a move lower in XOP. What I see here is a squeezing of this ratio and a potential break to the upside if crude oil can get its butt moving, which I think will be the case. So if XOP breaks out against GDX, yeah, XOP looks good, and I think we're going into a higher inflationary environment than what most people think. It's not just inflation pulling back, I think inflation could potentially reignite due to oil going up. XOP versus copper, it's still holding the trend line. Copper's got some deficits ahead of it, and so does oil. I don't know who's going to win out in the overall end, but to me, this still looks good for XOP to continue higher. You can also draw a trend line this way that I didn't draw in there as well. And then you've got XOP versus Moo, and XOP continues to outperform the agricultural ETF, and it still looks good to go higher. It looks really pretty solid. And then XOP versus OIH, this is the oil and gas exploration ETF versus the energy service. I think the energy service is going to win out in the end. I think that this could potentially go up and then probably hit this line here, somewhere in here, and then roll over, and then energy service eventually outperform it in a little bit. This will be a Batman pattern where we could pull on up to some degree, and then I think it'll roll over where energy service hits the gas. But yeah, I think oil and oil related investments look pretty good against other sectors. Here's silver. Now, I haven't talked a lot about silver. We've got some silver charts here. And surprising enough, we had a breakout of this downtrend line here just recently. Big bullish engulfing. Pretty bullish for silver, unexpectedly. Then we back out and we're still in this gigantic pattern that we're squeezing up in. Guys, this could break at any time. It really could. Now, I like my physical metals. That's the easiest way to play it. You saw what GDX and XOP and all those look like. And to me, it looks like it's in favor of crude oil still outperforming. But maybe silver's got something up its sleeve that it can really rip here. And this is silver versus gold. I drew this with silver being the numerator and the denominator being gold because everybody does gold to silver ratio. I'm just showing it a little bit different way in favor of silver, where we basically have all these support areas, a little false breakout there. This thing looks like it's ready to break out of the ratio as well. So I would be watching silver. Silver could be a good area. Now, I know a lot of people, they want to put leverage on it. What silver miner? What about this? The silver miners are still lagging because silver really needs to move higher to make these silver miners some money. They are underneath their cost curves for a lot of these silver miners. They are struggling. And if oil goes up with it, I think it's going to increase the cost curve up. So by far, the least risk way to play this thing is the physical metal itself. But you could look at the miners and watch them. I could also extend this all the way out and put it to the top here, just to let you know. This could be one big squeeze of a lifetime from 1978 and squeezing, squeezing, squeezing all the way to the corner. Another chart that's doing this that goes way, way back, like I'm talking back to like the early 1900s. Platinum to gold ratio is also squeezing. So silver is squeezing against gold from the 70s, and all the way back to the early 1900s, platinum squeezing against gold as well. And I think something big's coming, guys. I don't know what. Maybe it's these solar panels that are just going to eat through all the silver. I don't know. Maybe it's industrial driven. Crude oil positioning to take off. Time will tell. And these are a bunch of crude oil charts. Crude versus SPX. Look how cheap this is on a ratio perspective. Incredibly cheap. And it's broken out of the falling wedge. And a lot of times you break out, you do a return move back to this support level. We could rip. Crude oil versus gold, a falling wedge that we've broken out and doing a little bit of a return move here. Maybe we can start heating this up to the upside where crude oil starts to outperform. That would be my guess. And then crude oil versus uranium. I know we've got a lot of uranium bulls here. I am a uranium bull as well, but we're at support for crude oil in this ratio, and this very well could turn to the upside where uranium goes sideways for a little while and maybe crude oil gets to beat up on uranium a little bit. You know, it has its time in its sun eventually, guys, but crude oil's at a support level and it looks pretty good from a ratio perspective. And then crude oil, we've got a little bit of a bottoming pattern here. It looks like a shoulder, a head, and then a shoulder, and we're trying to break through the neckline right now. So to me, XOP looks like it wants to outperform. OIH doesn't look too bad. Looking at all those ratios, crude oil is cheap against most everything else, and it's basically trying to break out of the inverted head and shoulder pattern right here. So I'm getting kind of bullish, guys. I'm getting kind of bullish. And there is a ton of investments options with insane valuations in both energy service and in gas and oil exploration right now. And they're buying back shares, guys. They're buying back shares. Natural gas. So natural gas taps out against uranium. Look at this move here, guys. You've got a good resistance line going across here, and it just unleashed. Uranium going up at the same time that natural gas is going down. A massive move for uranium outperforming nat gas. Now, here's the thing, guys. When you get to extreme levels like this, you got to look at the natural gas sector. You have to at some point. Natural gas is basically underperforming everything. The weather has not treated natural gas very well. They're going to start to pull back rigs. They're going to start to pull back on production. And eventually, this will bottom out over the next few months. And then we're probably going to see a rocket launch of natural gas to the upside later half of 2024. And then 2025, we've got a wall of liquefied natural gas terminals coming on. This here reeks of an opportunity. That's what I think in natural gas. Here's natural gas. It's down over 50% in less than 5 weeks. What the? Yeah, that's not that obscene, insane versus history. I mean, natural gas has gone below 30% in a 5 week period um, pretty quick. I mean, look at all these big moves in natural gas. I think that this is an opportunity. I think it is a big opportunity. And that opportunity only comes every time it hits these big down levels. And then it'll swing back up to the other side like it normally does. Napalm says there's no way out of it. The upward pressure in the uranium spot market will continue for a long time. Why is that? Because the secondary supply used to solve the primary deficit is depleted. Now, primary deficit can only be solved with big new uranium production. Good luck with that. And this is your demand up here, and you can see the existing production, secondary supply, returning mine production, and then the demand is the line. You got deficits all over the place here, guys. What's going to solve this? Is higher prices really going to solve it? I mean, maybe it shakes some pounds out, but guys, what's going on with all the bearish sentiment in uranium? It looks pretty bullish to me still. Does this statement mean that consumers will not find some old pounds anymore? No, maybe a couple 100,000 pounds if uranium goes, price goes high enough. But you don't solve a greater than 40 million pound deficit in 2024 with a couple 100,000 pounds from here and there. So by declining operational inventories, you only increase the deficit just after it. So that's the second portion of this bad boy here. Another one from Jonathan Fisher. He says, so an extra 5 million pounds are needed in 2024 that are new, just added. So on top of all the boundless optimism and horrendous net short positioning we already had, WNA has just said we need an extra 2 to 3 new medium-sized mines to come on this year to fill the additional gap. So, and what this comes from is 4 more nuclear reactors are now on order, February of 2024 revised. So that's going to be probably out in the future. But we continue to stack restarts, new, we'll say new nuclear plants coming online. We're just stacking on the deficits, continuing to stack and stack and stack. Now, some people will say, how come the price isn't going up immediately? Guys, the price is going up. Don't be delusional. This takes time. You need patience. And this is the fundamental structure of the market. The uranium market looks absolutely fantastic. So in terms of the supply-demand balances and the deficits, prices will continue to go higher. Now, the equities haven't necessarily responded yet. And I can't say that the equities are flushed with cash and are returning huge sums of money to shareholders. So we are betting on more cash to come into the market, and it just hasn't done that yet. All of that money is over there speculating on tech stocks going crazy, I think. So be patient. The Oh, let me go back here. Coming on back. So we're coming on down. Finally got to listen to Orano's conference call at around 1 hour 16. They say they produced 7,146,000 tons of uranium in 2023 compared to 2022 production, a reduction of 5%. Have anyone seen what they guided? I think he means for 2024. So we keep getting underperformance from a lot of the main suppliers in uranium. Here's DNN. It's his biggest holding, and he's got this priced against Camco. And what occurs is Camco generally outperforms in the beginning of the uranium bull market, and then towards the beginning middle or middle-ish, we start to see these smaller guys start to outperform. So what we have is a breakout of DNN versus CCJ, a retest, and then potentially an outperformance of a lot of these smaller uranium companies. And that is what I would expect. And we just haven't had it. Be patient. Yes, you read that right. The World Nuclear Association has just raised their uranium requirements from last year, 170.7 million pounds to 175.5 million pounds for 2024, an increase of almost 5 million pounds. And it immediately deepens the 2024 supply deficit. The trend is still to continue to get more bullish over time. Why are the tech insiders selling here? Because we got a double top, boys, or potential. This could still go up a little bit more. It very well could, but I wouldn't bet on it. I would get kind of afraid with some of the speculation that's going on and all the insiders selling. Sure doesn't look like that this is going to continue to go up for a ton longer. Crude looking constructive here, just like I was going over. This is someone else looking at it. What he sees is a higher low, and then we've got higher highs, which means we are entering a new uptrend. So here's VLCC rates. Those are tanker rates. I think it's the second largest tanker or something like that. So VLCC rates are surging up roughly 20% since Monday. Some of the stuff on our website, we are taking advantage of this VLCC rate. Now, what I want you to focus on is this lower right VLCC. Draw a trend line through here. And what have we done? We've broken to the upside and are breaking to the upside upward for VLCC rates. Yeah, I'm capitalizing on this, and we're gonna get dividends from this big move and hopefully VLCC rates. Fingers crossed, baby. Here we go. This is the price to book. So this is US versus the rest of the world. We are up very expensive compared to history in terms of the S&P 500 index. The MSCI, the ACW excluding United States index, you can see is incredibly low. I think that this is tied to the commodity market. We haven't had that big surge yet in the decline of the dollar yet. I think we will. It's out in the future. It's coming. Be patient. This is another chart. It's looking at VLCC, Suezmax, and Aframax. It says strong crude earnings across the board now that VLCCs have woken up. Even better for eco scrubber vessels. I also think that this is another, maybe an indicator that maybe oil could go up too. Because it does look very similar to the oil price in the way that it's somewhat moving. But again, we have a falling wedge into the corner here. You can draw on the VLCC, which is the red line. If you draw a line going through this way, you can see that we've broken that to the upside. We have a breakout, and potentially we could run for a little bit. And with VLCC rates going on up, we could get a little bit freaky here with the price movements of some of these tankers. I love it. This is very bullish for oil demand. Population of Indians with incomes greater than 10,000, and that's going up quite a bit. 2027 estimates 100 million, and that is coming from 60 million in 2023. That is a gigantic increase in wealth for people from India. Here is demographic decline is going to cause everything to crash. What if they just more than replace you with unlimited immigration? Largest 1 year population increase in US history, 3.8 million with immigration. People just coming over the border. Here's the WTI to Henry Hub ratio. So this is a oil to natural gas. Very, very high, and this is probably going to peak very soon. And then I think this will be a double top. And then we're going to come and compress this down at some point, I think. I don't think it'll stay at 50 forever. Record US solar and battery electric capacity additions in 2024 will consume lots of silver. More than 80% of new electric generating capacity added to the US grid will come from solar and battery storage. I want to see this, guys. I really think, are we really going to add that much solar? 81%. We have natural gas at 2.5 gigawatts, wind at 8, nuclear at 1, and then 36 gigs from solar and battery storage. I don't know how this is in there. Battery storage is not a form of power generation, it's a form of energy storage. But okay, that's kind of weird. If mortgage rates were 3%, 50 million households could qualify for a $400,000 mortgage. At 7% mortgage rates, that drops basically in half down to 27 million that qualify. This rate shock is also an eligibility shock. So this is mortgage rates moving from 7 to 8%, priced out 5 million more households and 28 million priced out since 2021 in terms of the interest rates and the qualifications for a $400,000 mortgage, just to let you guys know. Copper futures up 16 cents over the past 5 days. We've seen a surge in copper price. That's also a pretty interesting setup in copper. And that is where I am going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. We just went over a big training session. It's posted on the website if you guys want to go back and look at it, or if you want to sign up and watch the video. The video went over a nat gas presentation of just what's coming out in the future and the electrical demand that's coming from artificial intelligence and all these different areas. And then I also went over how businesses, how a commodity price moves, how it impacts the business, how it impacts you as a shareholder. I went over that as well, some of the basics there. And I hope that basically is giving you guys the tools to become better investors. That's the hope. But that's what I've got for today. We'll catch you later. This is Finding Value.